In this video, I'm going to go through and explain to you the actual GL hits that have happened because of a particular process. And in this case, I'm going to jump up here and explain to you exactly what I've got going on. So first, we're going to go over here to settings. We're going to go to general departments. We're going to edit the parts department. And you can see here that I have changed this to this is the main parts department, and we sell to the other departments in the company at retail price minus 10%. So that's one thing that has happened. The other thing is that looking at the parts department, I am not in it. So I am not part of the parts department, and that is a key thing to understand here because I'm the one adding the parts to the invoice. So we're going to come back over here to the invoice, and the only thing that I'm going to show you here is the part. So I've added a part to this service ticket. So we're on a service ticket. I'm not in the parts department. I put this part on the service ticket, and during the process, I added a discount. And in fact, this discount was added for the customer. The customer gets a certain percent discount. So when I put this part on there, it automatically calculated a discount for him and put it on the invoice. So I personally didn't put the discount on there, but it is part of it. When I open up the detail on this part, you can see that the list price, what I am selling the part to the customer for, is $28.12. But it cost me, the service department, $90 to get this part from the parts department. So I'm actually losing money on this particular part. So now what I want to do is we're going to jump down here and actually take a look at the GL hits that happened as a result of this thing getting cashed out so that you fully understand how Lizzy treats all these hits. So the first thing is the cost of goods. So we have our inventory hit. We brought this part in for $28.12. So the cost of goods against the parts department was $28. So their cost on this part was $28.12. Anywhere you see these asterisks on an entry, this is purely a departmental hit. This will not show on your company-wide P&L, for example. It'll only show up when you're running a departmental P&L. So these hits, what we can see here is that the parts department has a cost of $28, and they sold the part for $90 because when the part hit the invoice before any discount was applied, the part cost $90 to them, the list was $90. So the service department, which is the other side of that imaginary hit, is a $90 cost. So it costs service $90 to get the part. But then service turned around and charged $29.53 for the part. So they lost $90 minus 20, so 60 something dollars they lost on this particular part, or $71. No, 69. Anyway, the service department actually lost money on the part. So looking at the GL hits, you can see exactly what happened, and just understand that these hits that you're seeing here, obviously if they really hit the general ledger like this and they weren't flagged, you'd have double hits and you'd show more profit than you were supposed to on the part. So these are in the general ledger. They're tagged though as pure departmental hits, and therefore they're eliminated from any accounting that's being done other than when you're running the departmental accounting reports. So that is pretty much all of an explanation as to what is going on the general ledger when you're actually doing departmental accounting.